Hey you there, welcome back to Risk v Reward. Today we're going to be talking about short squeezes, particularly Bed Bath & Beyond. We're going to be talking about why the short squeezes happen, how to trade a short squeeze, and then actually if you want to counter trend a short squeeze, what to expect, what to look for, and when to get out. Let's get right into it. Alright, so we're in my chart here on BBBY, and basically I have these blue lines here. These are going to be key levels. When you see all of these blue lines here on the chart, these are going to be actually key levels. Now this thing had a short squeeze today. It caused a whole lot of other stocks to short squeeze as well. But short squeezes are essentially, when you have a big short interest on a stock, it tends to mean that there's a lot of people just essentially shorting this thing long term, smashing the shorts, trying to get this thing far as down as possible. So when the market actually starts to go up or does some type of reversion, you have traders that look for these high short interest stocks, and then which is causing them to buy it, with anticipation of more people buying it to squeeze out people that are short. When they squeeze out people that are short, that means the short people that are in shorts have to buy the stock back, which creates more buying pressure, which ultimately makes the stock keep going up, keep going up, keep going up, keep going up. So let's talk about this, right? So if we look here in the 1 minute chart, you can see the previous day we had a previous high right here, about $17, right? And then we had a breakout of the previous day. The breakout of the previous day is somewhere down here around about 14-15 bucks. Okay, so that was a kind of a range from yesterday. So then when you look at the post market, and then you look at the pre market, you see we had a nice bit of consolidation. And what I always teach you guys, every video I tell you guys about consolidation. Let these things consolidate, let these things kind of go sideways and play in these zones so you can actually see good levels to play off of. Here you go. So you have good levels to play off of. Right on that $14-15 level, you have consolidation right above it. That would have been a good buy price if you wanted to defend this thing in the pre-market. So what happens is the market opens up, it goes up, and it goes right to yesterday's high, and then it fails. Okay, but when it fails, it pulls back into the top range of this pre-market high, right? So pre-market high is kind of up here, but it pulls back into this top range, and it kind of holds above. Now you have a retest at that top, and then you have a breakthrough that top. So once you broke through that top, you could have got long on the actual break. So either you're long down here all the way at this consolidation area, or you're just long on the breakout. So you had this level breakthrough. I'm extending this up so you can see. So you had this level breakthrough right here. You had the level breakthrough, and it actually hold above, and then it started to come back down. And this is where it gets interesting. So you could have took the initial breakout, took some profit here somewhere along the way, like $1.50 in profit, or you could have just waited for this thing to come back and retest. Now a lot of people love the break and retest. I am a fan of the break and retest, but you won't always get the retest every time. It won't happen all the time. You might miss a lot more trades than the break and retest method. But here you go. It holds above, kind of that yesterday's high, today's high, right? And it held above. This would be your buy the dip opportunity. That's where you would get long, and then you would get long and try to break out of this top level. Now these blue lines are key levels, right, that I have. So I actually try to counter trend this thing at 1845. It didn't work, so I got out for like a 10 or 15 cent loss. So that didn't work for me because the momentum on this thing was just super hot, right? Now I had the 50 EMA to show you guys kind of the momentum of the stock and show you kind of the trend. I'm trying to usually keep it clean, but I want to show you guys with the 50 period moving average. So so it breaks that key level first, it goes up to the next key level, denies it right at the next key level, right? And then it pulls all the way back right above that first key level, that 1845, that's your buy the dip opportunity. You could have defended that level, got some profit out, or waited for the breakout above that. Guess what? It broke out, it came back, sat above this key level right here, and then it ran again. Now, so it's the same thing essentially. So, breakout, consolidation above the high, gone. Breakout key level, go to the next key level, consolidation above the last key level, back gone. So it's essentially the same. This is how you buy the dip, right? And some people will call these, like, if you wanted to draw trend lines and stuff like that. I don't really draw trend lines too much because it is kind of subjective. But you could say bull flag here. You could say, bull flag here, right? You could say bull flag here, right? Right, so you could say these are bull flags, right? But I don't really draw trend lines because they're subjective, and depending on what you're looking at and how you see something, it is kind of subjective. So I try to stay away from the trend lines on this channel, but they do work sometimes. Okay, so next you have this key level right here, 2450. Like, I had these lines drawn before the price was even here, so I got to drawing these lines, and when it got up here, I'm like, okay, so the next level is here, and then 2850 level is where I was looking to actually get more short. So I took the counter trend at 1845. I was way too early, right? But it was, as you can see, it was a little bit heavy there. So based off the momentum that it had, I guess it was a good start. But for the rest of this, I should have been focused on buying a dip, but I wasn't too interested on it. I was trading other stuff, right? So boom, it gets all the way up, breaks through this key level, goes parabolic, goes into a halt. Now when the halt opens up, I actually had an order for it at 28.23s. Guess what? Didn't get filled because I didn't have shorts to short. So I didn't have shares anymore. For some reason, my broker didn't give me the shares. I don't know what happened, but I literally had the top. I had 28.37s or something like that was my price. Didn't get filled on it. I was willing to give it 30-40 cents, but I didn't get filled, right? So bummer. It happens. It is what it is. I would have got this whole move down and actually been able to get that $5 move, but it is what it is, man. I'm not really too worried about it, I guess. It's kind of a bummer because I did want to get short here. Now, the reason I chose here because it was just too far too fast, and it just went straight up in the air. Usually when you have stuff like that happen, it'll kind of cool off at some certain point. And just by me just watching stocks every day and watching squeezes, I kind of felt like it's a little bit too far too fast. I'll try to sell into this level up here, even though it did halt before this band. And that was even more of an indication that it halt before a key level to just go ahead and get short, because the opening, it wasn't great, right? So boom, did that. And then it would have worked, but I didn't get filled. So now what you could have done if you wanted to counter trend this, right? So if you were in a profit all the way up here, you ended up stopping out, whatever, that was great for you. You won the trades. I'm happy for you guys. Now, if you wanted to counter trend this thing, you could have actually let this fail, let this come back in, and actually tried to let it retest the level. This thing was super clean, and it's as clean as this thing was. I didn't trade it a lot. I took one shot at it, two shots at it, didn't get filled. I think I was kind of pissed off that I didn't have magically have shares to short anymore, and I just kind of left this thing alone. I didn't care much for it, right? There was other squeezes that were happening, other places that I gave shots at, right? So it is what it is, man. I'm kind of upset about it, I think, but it is what it is. But you could have let this thing try to retest this level. Guess what? It goes right to that halt level. It didn't quite make it there. It put in a sign of weakness there. That it goes right to that halt level, and it pulls right back in. So you could have got that $5 move again, right? So essentially, you just have to let these things cool off before you try to go counter trend, and then just kind of let them average out, because you even got the counter trend here again. You could have sold into this level and got extremely humongous move, right? But I still, at this point, particular time, didn't have shares to short, so I was like, the hell with this stock. I don't even want to look at it again. But it is worthy of me talking about, and I wanted to bring it to you guys' attention. Pretty much consolidation, break, hold over the break, get long, break, hold over the break, get long. That's pretty much how you're going to trade a short squeeze. This thing was absolutely nuts. This thing probably made some of these guys a lot of money today. I actually know some guys who got busted up in this area as well. So, I mean, it can happen to you on both sides. You just have to be careful and be mindful of what you're trading. If you have a stop, take your stop. If you had a 10-15 cent stop, you have to take that 10-15 stop. Okay? Because if not, you will get ran over dollars in the money. So, maybe if I did get short here, you know, I could have broke even still. But why would I hold it, you know, $10-20 again? Like, oh, I'm not gonna hold it $10 against me. Like, it's just not gonna happen. I'm gonna hold it 10-15 cents against me. Get out, okay? So, all right, that's all I have for you today. If you did like this analysis on how to trade these things, it's pretty much the same thing, man. You know, like, comment, subscribe. I appreciate the views. I appreciate all the comments. I appreciate all the likes that you guys putting on there for me. I will be releasing daily content. Also, you can follow me on social media at Big Hat Stocks. With that being said, I will see you in the next one.